Hello traders, Greg here with a market update. Okay, so we've had a pretty slow start to the week for markets. However, last night we did have Jerome Powell, the head of the Fed, speaking, which obviously the market did pay some attention to. But look, the last FOMC was less than a week ago where they cut rates, so very hard for Powell to say much different to what he said last week, and that was pretty much the case. So what we heard from him was that the cut last week was a risk management cut, like an insurance policy, because the labour market is starting to weaken. And he did say that the labour market, you cannot call it solid anymore. But he also did reiterate that whatever the Fed does now, there is no risk-free path forward. So if they do cut rates, obviously for the labour market, that's not going to help inflation because obviously inflation is not at their goal. In any case, look, the market really didn't trade or react to Powell overnight. But having said that, US equities going into Powell in the start of this week, S&P and Nasdaq did make new record highs again. So S&P up to 6,700. So yes, we still have a raging bull market. A lot of analysts now, Wall Street shops are starting to up their forecasts for S&P. So we're starting to get a lot of end of year and early next year forecasts for S&P to be 7,000 plus. So yes, at the moment it's probably not a good idea, as we've said quite a few times, of trying to pick tops. That obviously is not working, and being long, obviously, when something is trending exceptionally well is the bias. One market that is also a raging bull market is probably the best market so far this year, and is outperforming equities in a big way, is precious metals. And that has been a big mover again this week so far. So gold closed end of Friday last week at 37.80, and it's put on $100 so far this week already to make new record highs. Gold and silver as well. They closed at $43. And that's traded as high as 44, almost 50. So gold's up almost about 40% for the year, and silver as well is up even more. It's been a better trade. It's up over 50% year to date. So absolutely amazing what's happening with precious metals at the moment. And again, the bias there 100% is to either get long or wait for dips and buy dips, because it looks as if we've still got probably a long way before this market turns. As far as the currency space is concerned, haven't seen a lot of action. The only thing that we've seen really is euros had a decent move back above 118. So obviously that's a low 117s is good support. One thing about the euro that certainly is going to be supporting it is the fact that ECB has pretty much finished its easing cycle, whereas obviously the Fed has just restarted its easing cycle. So at some stage, I would imagine this year we're going to see euro test 120 properly and trade above it. So yes, buying dips and euros way forward as well. Look, Aussie has done really absolutely nothing so far at the start of this week, but that could change today. We do have the monthly CPI data out for Australia. Now that is important because we have seen a big jump in CPI in the last month. Monthly CPI got down to 2.1%. Last month we expected to go to 2.3%, but it jumped all the way to 2.8%. So a huge jump in Aussie monthly CPI. For today's data, market's expecting that to just marginally go up to 2.9%. But look, these monthly CPI numbers are volatile. So if it does come above expectations and above 3%, obviously the optics of that is not going to look good. And if market is still trying to price in some more rate cuts by the RBA, especially in November meeting for Melbourne Cup Day. But if we do see this Aussie CPI above 3%, let's say, maybe they're to price out those rate cuts. Maybe we'll see Aussie, which has been pretty sticky around 66 cents. Trade higher, and obviously that might not be good for ASX because equity markets love rate cuts. Good luck with your trades, and we'll catch back with you shortly.